Investing in the stock market can be a daunting task, especially for newcomers. However, with the right knowledge and strategies, anyone can become a successful investor. Stock market mastery is all about understanding the intricacies of the stock market and implementing effective strategies to make informed investment decisions. In this comprehensive guide, we will delve deep into various aspects of stock market investing, from the basics to advanced strategies, to help you become a confident and profitable investor. Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. Understanding the stock market. What is the stock market? The stock market is a platform where individuals and institutions buy and sell shares of publicly traded companies. These shares represent ownership in the companies and entitle shareholders to a portion of the company's profits and assets. Why invest in stocks? Investing in stocks offers several advantages, including the potential for long-term capital growth, dividend income, and portfolio diversification. Stocks historically have outperformed many other asset classes over the long term. How the stock market works. The stock market operates through stock exchanges where buyers and sellers meet to trade shares. Understanding the mechanics of stock trading, order types, and market participants is crucial for successful investing. Building a strong foundation. Setting financial goals. Before diving into the stock market, it's essential to establish clear financial goals. Are you investing for retirement, buying a home, or funding your child's education? Your goals will shape your investment strategy. Risk tolerance. Determining your risk tolerance is vital. It helps you choose investments that align with your comfort level. Risk tolerance is influenced by factors such as age, financial situation, and investment horizon. Asset allocation. Asset allocation involves dividing your investment portfolio among different asset classes, such as stocks, bonds, and cash. Proper asset allocation can reduce risk and optimize returns. Fundamental versus technical analysis. Investors use two primary methods to analyze stocks: fundamental analysis, which assesses a company's financial health and prospects, and technical analysis, which examines price charts and patterns. Understanding both approaches can help you make more informed decisions. Getting started with stock investing. Choosing a brokerage account. Selecting a reputable brokerage is crucial. Consider factors like fees, account types, research tools, and customer service when choosing a brokerage that suits your needs. Stock selection. Learn how to research and choose stocks. Factors to consider include a company's financials, industry trends, competitive advantages, and management quality. Building a diversified portfolio. Diversification reduces risk by spreading investments across various asset classes and industries. Discover how to create a well-diversified portfolio that aligns with your goals and risk tolerance. Investing for the long term. Long-term investing involves buying and holding stocks for several years. This strategy takes advantage of compounding returns and minimizes the impact of short-term market fluctuations. Advanced stock market strategies. Value investing. Value investors look for stocks trading below their intrinsic value. Learn the principles of value investing and how to identify undervalued stocks. Growth investing. Growth investors focus on companies with high growth potential. Discover how to spot growth opportunities and assess a company's growth prospects. Dividend investing. Dividend investing involves buying stocks of companies that pay regular dividends. Explore the benefits of dividend investing and how to create a dividend-focused portfolio. Trading strategies. For those interested in more active trading, explore various trading strategies, such as day trading, swing trading, and momentum trading. Understand the risks and rewards associated with each approach. Risk management and mistake avoidance. Risk management strategies. Learn how to manage risk through techniques like setting stop-loss orders, diversifying your portfolio, and avoiding over-leveraging. Common investing mistakes. Avoid common pitfalls, such as emotional investing, chasing hot stocks, and neglecting due diligence. Recognizing these mistakes can help you make better investment decisions. Market volatility. Stock markets can be highly volatile. Understand how to navigate market volatility and maintain a long-term perspective. Monitoring and adjusting your portfolio. Portfolio monitoring. Regularly review your portfolio to ensure it aligns with your goals and risk tolerance. Learn how to rebalance your portfolio when necessary. Tax-efficient investing. Discover strategies to minimize taxes on your investment gains, such as tax-efficient fund placement and tax loss harvesting. Resources and tools. Online resources. Explore online resources like financial news websites, stock screeners, and investment forums to stay informed and make educated investment decisions. Investment books and courses. Recommendations for books and courses that can further enhance your knowledge and skills in stock market investing. Investment psychology. Emotions and investing. Emotions can play a significant role in investment decisions. Understand the psychological aspects of investing, including fear, greed, and overconfidence, and learn how to manage these emotions to make rational choices. Behavioral finance. Explore the field of behavioral finance, which studies how psychological biases can affect financial decisions. Gain insights into common cognitive biases that can impact your investment choices. Specialized investment strategies. Sector investing. Sector investing involves focusing on specific industries or sectors of the economy. Learn how to identify promising sectors and incorporate them into your portfolio. Options and derivatives. Options and derivatives can be used for hedging or speculation. Understand the basics of options trading and how they can be integrated into your investment strategy. Real estate investment. Real estate is another avenue for investment. Explore the potential benefits and strategies for investing in real estate, including rental properties and real estate investment trusts, REITs. Retirement and financial planning. Retirement planning. Investing in stocks can be a crucial part of your retirement plan. Learn how to create a retirement savings strategy that accounts for your long-term financial needs. Financial advisors. Consider the role of financial advisors and how they can help you with your investment and retirement planning. Understand the different types of financial advisors and how to choose one that suits your needs. International and global investing. International markets. Diversify your portfolio by exploring opportunities in international markets. Learn about the benefits and challenges of investing in foreign stocks and how to manage currency risk. Emerging markets. Emerging markets offer the potential for high growth but come with increased risk. Discover strategies for investing in emerging markets and the importance of thorough research. Economic and market analysis. Economic indicators. Understand the key economic indicators that can influence stock market performance, including GDP, inflation rates, and interest rates. Learn how to interpret these indicators and their impact on your investments. Market analysis. Stay informed about market trends through technical and fundamental analysis. Learn how to read stock charts and financial statements to make more informed investment decisions. Ethical and sustainable investing. Socially responsible investing, SRE. Explore the concept of socially responsible investing, which considers ethical and environmental factors in investment decisions. Learn how to align your investments with your values. Impact investing. Impact investing focuses on generating positive social or environmental impact alongside financial returns. Discover how to invest in companies and projects that create meaningful change. Tax-efficient investing strategies. Tax-efficient asset location. Optimize your investment portfolio by placing tax-efficient investments in taxable accounts and tax-inefficient ones in tax-advantaged accounts. This strategy can help minimize your tax liability over time. Tax-efficient withdrawal strategies. When it comes time to withdraw funds from your investment accounts, understanding tax-efficient withdrawal strategies can help you keep more of your money. Learn about strategies like tax bracket management and Roth IRA conversions. Market crashes and corrections. Dealing with market volatility. Market crashes and corrections are inevitable. Learn how to stay calm during turbulent times and avoid making rash decisions that could harm your long-term financial goals. Buying opportunities in market downturns. Contrary to popular belief, market downturns can present excellent buying opportunities. Discover how to identify undervalued assets during market crashes and build positions for future growth. The role of technology in investing. Online trading platforms. Explore the various online trading platforms available to investors. Understand their features, fees, and tools that can help you make informed investment decisions. Robo-advisors. Robo-advisors are automated investment platforms that use algorithms to manage your portfolio. Learn about the pros and cons of using robo-advisors for your investment needs. Passive versus active investing. Passive investing. Passive investing involves buying and holding a diversified portfolio of assets, typically through index funds or ETFs. Understand the benefits of low-cost, low-maintenance passive strategies. Active investing. Active investors seek to outperform the market by making frequent trading decisions. Explore the strategies, risks, and costs associated with active investing. Building a legacy. Estate planning. Ensure that your investments and assets are passed on to your heirs according to your wishes. Learn about estate planning tools like wills, trusts, and beneficiary designations. Charitable giving. Consider incorporating charitable giving into your investment strategy. Learn how to donate appreciated assets and benefit from tax advantages while supporting causes you care about. Staying informed. Continuous learning. The stock market is constantly evolving. Commit to ongoing education by reading books, attending seminars, and staying informed about the latest financial news and trends. Investment communities. Join investment clubs or online communities where you can exchange ideas and insights with other investors. Networking can provide valuable perspectives and support. Investing in a changing world. Technological advancements. Stay up to date with the latest technological advancements that can impact the stock market. This includes innovations like blockchain technology, artificial intelligence, and renewable energy, which may create new investment opportunities. Environmental, social, and governance, ESG, investing. ESG investing considers a company's environmental, social, and governance practices when making investment decisions. Understand how ESG factors can affect stock performance and align your portfolio with responsible investing principles. Market regulations and compliance. Regulatory environment. Learn about the regulatory bodies and rules governing the stock market in your region. Understanding market regulations and compliance requirements is essential to avoid legal issues and make informed investment decisions. Insider trading and ethical considerations. Familiarize yourself with insider trading laws and ethical considerations when investing in publicly traded companies. Abiding by these principles helps maintain the integrity of the financial markets. Investment psychology and emotions. Mindfulness and emotional control. Develop emotional discipline and mindfulness techniques to stay focused on your long-term investment goals. Emotional control is crucial to avoid impulsive decisions driven by fear or greed. Behavioral economics. Delve deeper into behavioral economics, which explores how psychological biases can influence economic decisions. Understanding these biases can help you make more rational investment choices. Conclusion. Stock market mastery is a journey that requires continuous learning, discipline, and patience. By understanding the fundamentals, adopting effective strategies, and managing risks, you can increase your chances of success in the stock market. Whether you're a beginner or an experienced investor, this guide provides the knowledge and tools necessary to navigate the complex world of stock market investing and achieve your financial goals. Remember that investing is a long-term endeavor, and the key to success is persistence and a commitment to ongoing education and improvement. This is it for today's video. What do you think of our video? Feel free to share your thoughts in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.